We're going to do an expert technical analysis on VeChain using something called Elliott wave theory, but we're also going to include three other technical factors to give us a high probability edge on what's likely to happen with the price action over the coming days and weeks. My name is Jagir Singh. I've been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Been trading the markets for over 18 years now. Also, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I'm going to guide you through today's TA. So with that said, let's dive straight in. Before we dive into the detail, let's just look at the macro picture with VeChain. Now, we had this massive move to the upside and we've had this big correction. This has been the bear market, and we're going to focus on this part. So this is on the weekly chart that we're looking at, but we're going to focus on the daily chart. So now let's just go into the daily chart. And the first thing that we're going to do is look at the pattern position of the market using Elliott wave theory. Now, the key thing you want to know with Elliott wave theory is that the market typically moves in 5s and 3s. The difficult part is annotating where in the market is in terms of Elliott wave theory. Is it on a wave 4? Is it on a wave 2? Is it on a wave 5, etc.? So I'm going to do my expert TA over here, because I've been doing this for nearly 18 years now. And the key thing that I'm seeing is that the market looks like it's made a nice wave 1. And you'll see why I'm drawing it like this in just a second. We've made what looks like to be a pretty clean wave 2 down here. But this is where it gets a bit more nuanced, because with Elliott wave theory, you have multiple degrees of wave counts. In other words, waves within the waves. And when I'm looking at this, what I see this as is a wave 3 up here. Now, it's not been confirmed yet, so I'm going to put a question mark just beside it. And the way we can look at this is that this looks like a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 of a wave 3. So now we have a pretty good feel for the market. So what comes after a wave 3? Well, let's say correction is a wave 4. So let's now pop that over here. Let's pop this as a wave 4. Now this wave 4 has not been complete, if it is a wave 4. And I say if because we have to make a decision in terms of buying and selling with the information at hand. And with that, we're looking just for the high probability outcome. So now we've got a good technical feel of what the market is looking like. Let's actually also break down this correction. So there's a couple of ways of doing this, but I'm going to draw it like this. It looks like an A, B, C correction of some sort. So in other words, what we're saying is with VeChain, it looks like we've made a nice 1, 2, 3, and it looks like we are next to completing a wave 4. And if that's the case, we should anticipate that the price to make new highs or new local highs above this point over here. So that's the first part. So we've got the Elliott wave theory done. But can we use some more independent technical factors, in other words, independent of Elliott wave, that also supports our thesis on this? So the next thing that we're going to use is something called Fibonacci price. This is measuring buying and selling behavior. And what we're going to do over here is we're going to measure how long was the wave 3 price movement over here. And we're going to do something called a basic retracement. It's one of the most basic Fibonacci tools, but it can be very, very powerful. And the relationship that we want to be aware of between wave 3 and wave 4 is a 38.2, 50, and 62%. In other words, a retracement of a minimum, a wave 4 is normally a minimum of 38.2%, typical 50%, and usually no more than 62%. Now with Elliott wave, one of the great things, there's 3 key rules. And one of the key rules of Elliott wave theory is that wave 4 should not overlap into the range of wave 1. So this is important because if this occurs, I'm just going to change it to a black line over here. And we'll make it a dashed line as well, just so it's a bit clearer to see. If the price does fall, it's unlikely to, but if it does fall below this point over here, 0.02 in terms of VeChain's price, then this would void the wave count. There will be a bad sign or a bearish sign, and then we'll have to reevaluate the market. So it's unlikely to do that, but we want to be aware of that at the same time. Now, the other thing that we want to be aware of is time. How long does a correction usually take? This is really, really important because it can give us a nice real feel of, is this likely coming towards the end of a correction? So we're moving over to the third technical factor. We've done Elliott wave and we use the price. We've now done pattern, should I say, Elliott wave pattern. We've done Fibonacci price, And now we're doing the third, which is Fibonacci time. Markets tend to have a buying and selling rhythm, and it's dynamic. So we want to look at it on what is the typical time taken for a correction. So what we're going to do, how we're going to do this, there's a tool on TradingView, and it's a default tool, so you don't have to pay extra money for it. Is we're going to measure how long in terms of time did this wave 3 take. Like, so we have this wave 3, what looks like to be a wave 3. We're going to measure this time, and then we're going to project forward 2 dates, or 2 ratios, should I say. And the 2 ratios are 38.2% and 62%. Now, these are the 2 typical, most common amount of time taken for a correction to complete. So what we have over here, and I'm going to draw it as a pink box so we can really see it clearly, is a price and time zone. So now we've got 3 independent technical factors suggesting that we're at or near the completion of a wave C of a wave 4. In other words, again, let me just summarize. We got an A, B, C of a wave 4. That's the pattern. We're in the 38.2 to 62% range of the price. We're in the 38.2 to 62% in the time. So we've got 3 independent technical factors, but I told you 4, and we're going to cover the 4th one now. But if you're liking today's content, do me a favor, like and subscribe to the channel. It makes a big difference to the channel itself in terms of how many people get to see this content. But also in the comments below, let me know what other coins you want me to look at that are in the top 500 cryptocurrency pairs that I can do a technical analysis on, and I'll do this exact same thing. Pattern, price, time, and now we're moving over to the 4th, which is momentum. Momentum just measures the acceleration and deceleration of the market, and there's many momentum indicators. There's thousands of them, in fact, and they all pretty much do the same thing. They just represent the data in a different form. What we're going to use is something called the stochastics RSI. It's one of my favorites because it's pretty clean, and I've actually created this dashboard at the bottom over here. And what this dashboard tells us is the higher degree time frame. So we're looking at a daily chart right now, but the higher degree time frame is a weekly time frame. So we're moving 1 time frame up. A lower degree time frame will be the 4-hour or the 1-hour chart. So we're on the current time frame on the daily, but I want to be aware of what is the weekly momentum doing, and is that supporting the case for our pattern, price, and time analysis? And in this case, the answer is yes. The weekly momentum is called strong oversold, and the slower look back period is also saying strong oversold. That's indicating to us that we're at or near a low from a momentum perspective. But let me just break that down for you because I think it's really important. You can understand the logic. Let me just go to a weekly chart very quick. And let's just go to the recent. In fact, we can do it like this. It's based on this over here. So this over here is in the bottom half, or the bottom third, should I say, of this. That's where it says oversold. And the 13 look back, which is basically a slow look back of measuring the rate of change, which is the acceleration and deceleration of the market, is also oversold. And when it's oversold, it tends to correlate with a low in the market. So that's what we mean. That's what that dashboard is telling us. It's telling us that the weekly momentum is oversold. What about the daily momentum? What about the immediate momentum right now? Well, the slow look back is also oversold. In fact, it's made a bull reversal. Hence, over here it says strong uptrend. It's referring to this over here. And the 13 look back is not quite in our favor right now. It's pointing down. And the ideal is when all of them are pointing in the same direction. They're either oversold or bullish. That's what we want to look for. So the last thing that we're going to cover is something called a pattern reversal signal. So hopefully you found this useful, and please do subscribe to the channel. I want to really provide some great value. So let me know whatever coins you want me to look at. But what we're going to now look at is something called a pattern reversal signal. So we've got our pattern in terms of Elliott wave, done. Looks good. You know, the rules, everything's in play. Fibonacci price is looking good. We could do some more advanced ratios as well, but we won't do that right now. But we can do some other advanced ratios. In fact, let's just do one quick advanced one. One of them is something called external retracement. Very reliable, very reliable. When you have a pretty clean A, B, C correction, we can measure this distance, and it's called an external retracement. And more often than not, the end of the correction would fall into the range of 1.272 and 1.618. Let's just quickly do that. It's very reliable. Like I'm telling you, it's uncanny how frequently the price would just come into the zone and then reverse. So let's just quickly draw these on. You can see the ratios that we want is 1.618 and 1.272. So this gives us a stronger clue that is more likely that the price is going to come into this range over here. And that would support a few different factors. So we want to be aware of this. We won't do any other ones. There's some advanced time analysis as well, but the basic retracement zone is there as well. And the momentum position tells us that we're at or near a low. So what would be a pattern reversal signal that would confirm or signal at least that this wave 4 is complete, where we can remove this question mark when we have more confidence? So the obvious one is the price going above here, but that's quite far away from the market, right? So the pro is it's a strong confirmation, and we can be pretty certain a wave 4 low is made if the price goes above that wave 3 high. However, what's an earlier pattern reversal signal? Well, another strong one would be going above this swing high. But again, the downside is it's quite far away from the market. So in other words, you might not want to wait for the price to come up to here because you missed out on all of this opportunity. So what's an earlier pattern reversal signal, and how can we take advantage of this information from a buying and selling perspective? When an earlier signal, which is pretty strong confirmation, is if the price goes above this swing high. So let's just draw a line so you can see the price of this as well. And I'll just read out the price just in case you're watching this on a mobile phone. This swing high is 0.038. So in other words, if VeChain goes above 0.038, we can be pretty confident that the wave 4 low is more than likely confirmed. Another pattern signal is what is the price structure. This is important, and I want to cover this because it's a nuanced detail and it will come with experience. But if the move to the upside, let me just draw it like this. Let's just say we do go above this point, but it's in an overlapping wave structure, right? If it's an overlapping wave structure, that's not a sign of strength. It's a sign of weakness. It's a sign of a correction, and that would indicate we're likely to make another low before the wave 4 is complete. However, if the movement to the upside is in an impulsive structure, what that means is non-overlapping waves, higher highs and higher lows without them overlapping each other. That's a positive sign saying that the buying strength is pretty strong. So we've got a pattern reversal signal. We've got the 4 independent technical factors of pattern, price, time, and momentum. And we've got this impulsive structure. Another big clue that you want to be aware of is something called an overbalance of price. What that means is we can actually measure how big was this little move to the upside and how big was this little move to the upside. If the next move to the upside is bigger than either of these two, that would show there's a break-off structure. This is the first time in a short while that the buying has been much stronger than recent buying. That would also indicate. So what we're looking for is a pattern reversal signal. We're looking for an impulsive wave structure to the upside, ideally in a 5-wave sequence. And we're looking for an overbalance of price, the move to the upside to be bigger than the former moves prior. Now you have the expert TA for VeChain that will help you hopefully identify if you want to buy, if you want to sell, do what you want to do. But if, and this is the next piece of the puzzle, which we won't do today, we might do at a future date. Let me know how you're finding this, by the way, in the comments below. What's the most valuable part of today is if we do get that pattern reversal signal, especially if it's above here, then we can do some technical analysis to see where's the price likely to go. In other words, we could do end of wave 5 price projections, time projections, pattern position as well, and then we can pinpoint the end of a high probability wave 5, because after a wave 5, you'll typically get a bigger degree correction. In fact, let's just finish on that and then we'll wrap up for the day. Let me just do this because I think it's pretty important that you understand that it becomes fairly predictable on what's likely to occur if we do end up getting a 1, 2, 3, and this ends up being a wave 4, and we do get that wave 5. There's normally 3 price zones. There's a minimum, there's a typical, and then there's a maximum, and then there is an overextended wave 5, which occurs relatively frequently in cryptocurrency in general. But then afterwards, we would anticipate a bigger degree correction and then a bigger degree movement to the upside again that we want to be aware of. So let me know what cryptocurrency you want me to look at next, ideally in the top 500, because the volume means that there's normally a better pattern correlation where we can analyze it from a technical perspective because the fundamentals are baked into the price. We'll look at the Elliott wave pattern, the Fibonacci price, Fibonacci time, and then the green light we use as the momentum that helps us make buying and selling decisions. Until then, I'll see you next time.